So what is your advice for people who are now like kind of having to really kind of reconcile the fact that maybe the tax returns were incorrectly, they
I
never
understand.
picked up these PFICs, they didn't even know
Yeah.
what PFICs were or that they had them?
Yeah. So, I mean, I think the biggest issue that you run into when you fail to report PFIX is that the statute of limitations to examine that tax return stays open indefinitely. So, and what that means is generally when you file a tax return, the IRS has 3 years from the due date of the tax return or when you file it, whichever is later, to examine a tax return and make adjustments to that tax return. In some scenarios, it can be 6 years if there's a substantial omission of income, but generally speaking, 3 years from the due date of the tax return or when you file, whichever is later. So if you fail to report a PFIC, so your your advisor invested you in foreign mutual funds, you did your TurboTax tax return, and then your CPA says, hey, where are these Form 8621s that are used to report PFICs? And you say, what's an 8621? The real risk that you run is that at any point in time, indefinitely into the future, if one of your returns were to get examined, they could open up and examine a return where you didn't report that PFIC. So I think that's the biggest risk.